Good morning, Daily Rip Crew. Welcome back to another week, another episode. Something you'll notice about this episode and the ones going further is that I don't have any problems with the Wi-Fi. I don't have any problems with my computer. None of that no more. We got direct Ethernet connection, so we shouldn't expect any more problems, hopefully. So shout out to that. We fixed that over the weekend. But yeah, I'm excited for a new week. Excited to get it going. We got a busy week ahead of us. Earnings are kicking off with the banks. We got economic data kicking off, so gonna be exciting. How we feeling, boys? We got Shy, we got Alex King. How we doing, boys?
I'm feeling good, to be honest. Nice to see you
Yo.
on the week. I feel good.
Good stuff. Shy, how we feeling about going over the weekend?
First off,
like,
Jordan, I do want to say
it's delayed. Shy is like
I
mad
do want to
delayed for
say
me.
that I think it's fun. Oh, am I? Let me go back on and off because it's disconnected for me too. Han.
You're a little delayed, brother. It's all good though. No, I was just curious on how Shy is feeling over the weekend. I'm getting excited for the new week, but let's just get rolling into the weekend rip and just recap what happened over last week, and kind of get going into what we're expecting for the new week ahead. But over last week on Monday, we got chip stocks surge ahead of CES 2025. Nvidia made new all-time highs ahead of CEO Jensen Huang's keynote speech. And we saw that. I mean, Nvidia took those highs and basically insta rejection. We really didn't see continuation over those highs. So that worries me a little bit personally. And then the next day after that event, saw a little bit of a sell off. So obviously on Tuesday, Nvidia faced a reversal of fortune after the speech, failed to provide material details about the company's next product line. In November, Jolt's data dampened rate cut hopes. JP Morgan Chase called workers back to the office, and the first trends with friends of 2025 broke down with the fart coin frenzy. You guys should definitely check that out on the Stock Twitch channel. Shy, we got you back. Are we good?
Yeah, can you hear me all right? Is there
Yeah.
any kind of lag?
No, I think you're good now. But no, I just wanted to get your thoughts real
I'm
quick,
good.
kind of on what we had last week. Everything happening with Nvidia. Obviously, we saw a bit of a downturn after that speech.
hmm
I was just curious on how you're feeling about everything.
Yeah, I mean, first off, Jordan, I'm glad it took the LA looking like hell fire pandemic for you to upgrade your tech system over the weekend. I'm
Thanks.
glad
Yeah.
the half glass full of all that stuff happening. Uh, but yeah, I mean, regarding last week, I think it's just a continuance of what we anticipate towards the end of last year, where January might be bloody. Like we didn't get that Santa rally we expected towards the end of the year. Usually, that is a pre-read of somewhat of a bloody January due to profit taking. There's no more tax loss like cap gains issue on taking some chips off the table. There's going to be some repositioning that's going to occur from probably large cap tech and semiconductors towards uh, some the small cap and mid cap defense, like whatever it might be. There's going to be repositioning because a lot of these names have run up significantly, not just the past year, past 2 years. That you have to ask yourself, like, all right, what's next? Like, what is next for big tech? It's going to have to be AI continuing to innovate, but at certain points, they're going to have to ask themselves, like, all right, well, what is going to be the next catalyst? Because right now we are getting a low hanging fruit right in this theme, and it's gonna get much more competitive. It's a very similar pathway, especially on like all the big tech towards LLMs, uh, or like the initial phase of AI, which is infrastructure. Like you feel like all the big tech companies are spending billions of dollars, all this money to get all the tools necessary to figure out the future behavior. It mimics a lot of what has happened in the past in history, where you saw in the dot com era. You saw it even like something even more recent was the streaming. Like all the big companies wanted to become streaming app, and they all caught major bids from it initially. Then economics have to come to play. You have to ask yourself, what's the ROI on these investments? And that's when things get tricky, gets a little hairy, and it just creates a lot more noise. Like that's why things happening in large cap tech and semiconductors. Like nobody wants to be in the middle of that S curve for big tech, and nobody really wants to hold the bag on the hardware because it is a cyclical business, semiconductors, and nobody wants to hold the top while it gets through the cyclical bear nature of the range. So I think again, I think the market's going to end up green this year. I don't think it's going to be the beginning of a bear market. We're probably going to see a correction, which we're seeing the beginnings of, but I still think it's buying the dip opportunity, especially when software is going to take off this year, in my opinion. And The only caution I want to make is ever since this rally began, since October 2023, the market has, SPY specifically, has bounced off their 21-week EMA. Every single time that has been the level we saw that V-shaped recoveries begin. That's at 580. We're below that this morning, and looks like pre-market action is accelerating even more. So like, I might get defensive depending on what the opening is going to be on some hedges, just because we are violating a key characteristic that's been holding on this 2-year rally we've seen in the market. If that's deteriorating, you have to have an open mind and get defensive, protect those gains, and that's what I'm going to look for today at the open.
Good stuff. Yeah. Also, just real quick, shout out to all the people on the StockTwits platform watching right now. You guys can now watch the stream directly on the platform. So stoked to see people doing that. And I think we got 135 people or so. So good stuff there. Love to see it. Just kind of recapping through Wednesday. Obviously, we saw quantum stocks pull back very, very nasty. Wasn't a good week for quantum. So obviously keeping eyes on that. I did see IonQ bounce back decently into Friday. I think it was Shy. I don't know. I know
You know
watching
why?
IonQ pretty quickly. Why?
Everyone saw my segment on Fox Business. I was talking IonQ. He's like, I gotta buy. No,
That's so true. If you
no.
guys don't remember, Shy was on Fox the other day talking about quantum. Pretty awesome.
No, I think it's gonna be, it's the toll you have to pay to be early in a secular growth theme. That quantum, like there's going to be volatility, rug pulls. IonQ, like the whole bucket of quantum, they went 5x in a matter of months on nothing fundamental. It was just an academic breakthrough from Google Willow drove attention to this industry that caused all the names to start getting re-rated from, oh, maybe this isn't decades away. It might be years. And I think Jensen's comments earlier in the week on like quantum computing being 15, 20, 30 years away, that was completely misquoted. And this is what I talked to Charles about on Friday on this show on Fox Business, where I think he was referencing the general availability of quantum computing is 15, 20, 30 years away. Like Jordan, for example, he just got a new PC over the weekend. He will not be getting a quantum computer for at least 15, 20 years. It's too expensive. I think the ChatGPT moment for consumers in quantum, that's decades away. However, the real-world business applications being used right now from quantum is occurring. You're seeing with IonQ already with their partnership with Azure and AWS, like it's being used right now to tackle real-world applications. So like that was a little being misquoted in my opinion, but it took the rug out completely from the big-time froth that these names have had. And now narrative falls price action, even though if you zoom out, the stocks are still up 400% since the rally began. But because it's down 50% in a matter of a week, people are feeling a little squeamish. And to be honest, like I could see these quantum names going down even more until we see some kind of technical bounce. But either way, you don't invest in these companies in a matter of months, quarters, even years. Like you have to believe that they're gonna expand and dominate over the course of the next decade in this theme, especially something as early as quantum. And you have to have the stomach to go through these ups and downs. Like the big tech companies at Apple, Microsoft, Google, like Amazon is notorious for, I forgot what that quote is from Bezos, but like I think his stock was down 70 or 80% at one time, like in a matter of days in the early .com era. Like this is part of the course for early disruptors. So like just don't give into the FUD, have a long-term mentality, but also be aware there's going to be crazy volatile moves along that path.
It's a question of allocation as well, right? So, if you're going to invest in something new that's spiky like this, you probably don't want to put your life savings into it. You probably want some allocation to the best names. And often with something like this, you buy a little bit of the lows and almost ignore it for 2 or 3 years and see what happens. As you say, there are use cases of quantum today. Some of those hardware companies will make it, some won't, some will be bought along the way, some won't. It's almost impossible to say. So I think you've got to look at these things two ways. You can chase momentum for sure, if you know what you're doing, if you can chart momentum, if you really know how to do it, and you have the discipline to get out when you're up. They're hard dips to buy these, I think, because a stock like that doesn't have fundamentals supporting it, that can be a 90% drop easily. And good luck recovering from that if you've got a big allocation to it. Or just put a bit of money in, put a bit more in at the next sell-off and a bit more and see what happens over 2-3 years. And if you
DCA style.
Yeah, exactly. Precisely. And if you put in an amount that can't hurt you, well, you won't get hurt.
Yeah, absolutely.
And,
No,
and
I
I
agree.
mean, for the amount of I talk about quantum computing, like Jordan, what percentage allocated do you think my growth portfolio is quantum right now for me? Just guess.
I would say less than 10%. I think.
It's 2%, and that
Yes.
just goes exactly what
Exactly.
100%. Like you need to be like I sold half my position. I got overweight IonQ at $7. I sold half of it at 18 to 20. Now it's all profits and it's 2% position. I'm gonna let that ride until the thesis breaks, but like I will not lose sleep if that goes to zero at all. That's like what he's trying to indicate.
Yeah, exactly. If you take something like that and you size it for zero, which is if you lost all the money in it, not a great outcome, but it's not going to hurt you. I think that's where you have to be with these super speculative things.
100%. And I think I make this joke like grandpa's quantum computing plays are IBM and Honeywell.
Yeah.
But like you can also make the joke like your parents play or like everyone should be aware of like the safer way to have that exposure, but also like not be purely relying on it is Nvidia.
Yeah.
I know like Jensen's like talking some like smack on quantum, but like their CUDA quantum platform is like essentially making it easier for anyone to try their quantum ideas without having to own their own fancy computer because they allow they allow the developers to simulate quantum algorithms on their GPUs before deploying it into the physical GPU. So it saves the costs and it's more efficient. And they're going to be the cornerstone of quantum computing, in my opinion, like they are for AI. So that is a way to get exposure in quantum if you guys don't have like the stomach or are willing to experience the ups and downs or like a 90% fail rate probably from all the pure plays out there. Nvidia gives you that exposure, and not just the quantum, it's also an AI, clearly robotics after seeing what they're going to do for physical AI last week. Like, so I want to add that color. Like there's more ways of playing quantum, and there's a very boring grandpa way, medium way, and the really risk appetite way if you guys are up for it.
Yeah, fun stuff there. Just to kind of recap to wrap it up for Friday, good news is bad news again is stronger than expected. Jobs data pushed rate cuts hopes out even further. Constellation Energy and Constellation Brands had very different trading sessions, and social media stocks came back into focus. We saw Snapchat getting some movement last week, so interesting stuff there. Closing prices from last week, everything in the red, not looking too good. But I don't know. I'm personally looking at the charts. I think I'm expecting a little bit of a relief bounce this week. We'll see if we get that or if we just keep drilling. I think even if we want to go lower, though, I would like to see a bit of a relief bounce into some levels that I'd be looking to short potentially, but we'll see what happens this week. But yeah.
I mean, I agree with your sentiment, Jordan, because like the VIX at 22 pre-market, like it's elevated. It's kind of going through a 5 or 6% correction in the market. The only reason like I'm like a little worried is because again that 21-week EMA, like, it got violated on no resistance at all. Like any bounce we got was a lower high last week, and it got sold off pretty quickly.
Order flow's just been extremely bearish, so it's hard to fight against that until I see like a real change in the structure on the market right now. You know what I mean? But it's like it's hard to think shit. Like we drilled it pretty much every day last week except for Monday, and then I usually expect a little bit of a relief bounce like back into that range on Friday. We didn't even see that, and we're continuing to drill this morning. So that kind of like is playing towards my thesis. Of course, it's short term, right? Doesn't mean we're going to the all-time highs again, but we'll see. We'll see how we play out throughout the week.
Well, this is what everyone wanted. Everyone, you heard the rhetoric all Q4 is like, I can't wait till the dip occurs. I can't wait till the dip occurs. Correction.
Right.
And now it's kind of it's in front of you, and now everyone's like, oh my God, it's going to get worse. Like, I'm
it's going to go to the like, that's just a thing that people say, right? No one that means it says that.
100%. Like, I think this is like, if you're a long-term investor, you have your conviction list of what names you want exposure in. This is kind of when you have your slow DCA plan start putting into place. Like right now, like we buy like 21 EMA. That's ugly. I've been saying for a while, the market needs to test their 200-day SMA. They haven't done it in over a year. That's widely unheard of. It's very rare that it's this extended. Have your like now that we violated 21 EMA, you can get defensive or slowly just like if $100 you have your cash that you want to put in the market, use $5 right now. Use then $10. I guess it gets lower and lower. Like have that slow plan, because I do think that this bear market is not going to occur this year. Might occur middle of next year, but this will be a good year for the market in my opinion. So like you need to buy these macro-driven pullbacks, especially on something I don't really know how to identify this pullback except for the 10-year yield as being stubborn. And that's something that can change very quickly on data.
Yeah, I
Oh,
think
it's
the other thing you have to look at is,
definitely.
you've had 2 years of only up. And so it's easy to get used to only up and then panic when there's a pullback. But yeah, this pullback so far, you've got a whole lot of people freaking out, which is, that's late levered money, over levered, late bullish money.
Mm-hmm.
And if you look at, just look at the drop, we're, I don't know, 5-6 points from all-time highs on the SPY. The drop isn't much compared to the July to August drop last year. It's about in line from memory with the April drop in 24, the April drop in 23. So far, it could change today. It's just a pullback. But I think that people have to get used to certainly a more volatile 25. So I agree with you. I think probably the market's up this year. Of course, anything can happen, but probably it's up. But I think it's going to be harder work this year. And I think people have to learn to, one, stomach volatility. So that goes to allocation, it goes to leverage, it goes to whether you use options or common stocks. And I think it goes to, learning to sell rips and buy dips, as opposed to just, lever up and hold on and collect the free money. I don't think 25 is going to be like that.
Yeah, not going to be as easy as 2024, I don't think at all.
But you know what? A lot of people messed up 23 and 24, or, a lot of people looked at it and didn't believe it. So
Yeah.
all you have to do is, look at the market in front of you and try and work out the character of the market in front of you. A ton of people told themselves that 23 wasn't happening and 24 wasn't happening, and either didn't make money because they left too much in cash, or actually lost money trying to short it. So people shoot themselves in the foot all the time.
Exactly. Yeah, just to kind of touch on that for a second, I feel like people definitely try and short a little too much sometimes. I mean, the market, when you look at it from a higher time frame perspective, of course, I mean, it goes up, right? So knowing that majority of the time, I do feel like people try and, I mean, there's more money lost trying to predict a bear market than just trying to ride the bull market, right? So I feel like gotta hold off on the shorts until, like, you're really confident in it, unless you're trading short term, right? Like, have I been playing shorts on futures like through this dip? Of course, absolutely. But I'm not sitting in swings, thinking this market's going to completely crash. We're not even close to that yet, in my opinion, and it's not something I'm worried about yet. So I'm with you, Shy, with keeping in the mindset of buying dips for the long term, for the rest of the year. But we'll see how things kind of go
also,
these next few months too. This next few months with earnings are going to tell a lot, I feel like. So.
Well, I also want to add, like, what are you going to hold off on buying a once in a generation, like, technological breakthrough like AI, quantum, because the 10-year yield's at 4.8, 4.7%? Like, that's why you're holding off on it. No, like, you don't. Especially like I know, like, Trump-led presidency is going to bring volatility to the markets, but, like, I do think it sides on the era of, like, more bullish and bearish, especially in his first 100 days of whatever he's going to do. So, like, just keep that in mind. This is not we've had multiple significant corrections in the market, like, that turned to bear market in the past 5 years alone. I just don't think that's going to occur this year. I really don't.
People are all bent out of shape on politics as well, right? So depending on whether your team won or lost, right? People either think that the market's going to go straight up from here because, tax cuts and deregulation, or they think the tariffs are going to kill the market. And, neither of those things is true, obviously. As you say, we will have more volatility, but if you look back to the last GOP administration, they looked to the Dow in particular as a scorecard, right? So when the market was up, they would be all over TV, all over Twitter, trumpeting the fact. And so, it's possible, anything's possible. It's possible that the market, goes to hell under this administration, but probably it won't, because probably their policies will be pro-market, pro asset owners. If you look at who's in government, it's
pro business. Yeah,
exactly. And so again, probably not as easy as 23 and 24, because if you just put money in the money machine and did nothing, then you did great. Probably you need to learn to read the tea leaves a bit more. But is the market really going to hit the floor under these guys' watch? I would be surprised, is my view, because they'll just do everything they can to get things moving up.
Exactly. I agree. To recap some bullet points from the weekend, wedding registries shrink to accommodate cramped living quarters with record home prices impacting household formation. Those who are tying the knot are shrieking their lives to fit into cramped apartments or scaled down starter homes. As a result, they're passing on the stand mixer or barista grade espresso machine, opting for smaller gifts like a knife set, rice cooker, or other small kitchen contraptions. Makes sense when you're trying to fight to live in a spot, you know, with multiple people. It makes sense that you're downgrading the presence a little bit, right? So no surprise there. EU approves $35 billion Synopsys and Ansys merger. The European Commission has given the green light for Synopsys to acquire Ansys, but requires them to sell off various software products to preserve competition. The UK Competition and Markets Authority launched its own antitrust investigation back in August and indicated earlier this week it would be willing to accept the proposed divestment offer too. Shay, you get any thoughts on that? I was curious. Or Alex?
I mean, Synopsys has a duopoly in what they do, which is the software behind the hardware. It's just, I don't know. I just don't think AI hardware is really where you want to be if you're not tackling inference like Broadcom, Marvell, or Astera Labs, or like Nvidia, who has an ecosystem around like you need such an ecosystem now around hardware. Like being a hardware company isn't good enough anymore.
Yeah.
So Synopsys, like it has a duopoly, but like their fundamentals aren't screaming, I need to buy this dip. They have a moat, they have a duopoly. It's just like it doesn't excite me enough to get that urgency to capitalize on the stock right now. So that's my 2 cents on Synopsys.
Maybe just something to keep an eye on for a little bit.
Yeah, I mean, if you look at Synopsys and Cadence, they've both been on an absolute tear for a long time. You know, and they're now companies that, you know, I'm old, as you can see. So, you know, these are companies I knew a long time ago, and no one had ever heard of them. They were too technical and boring. But a couple of years ago, you know, suddenly they were everywhere, and the prices lit up. So, yeah. Also, if they're, you know, a big merger like that, that's a cost out merger, right? That's reduce duplicate costs, you know, get margins up. That isn't a growth driven merger. That's not buying into a new market segment. That's consolidation. And so that tells you something about the maturity of the sector, as you say.
100%. It's like it tells you a lot as well, because again, I said that's like more of a software play in the space. So they have much higher margins than there are other players in that space. So like even then, like they're trying to do this margin they have 82% gross margins right now. So like they're trying to make this like into a margin expansion opportunity, synergize some of the expenses, the OpEx required, just because like they have to do something, because right now the top line growth is the low teens for the next couple of years, and they're pricey right now. So like they have to fix that narrative. If they can't grow to the high teens to justify the valuation, they have to have a margin expansion story, and this is kind of what that's going to be.
They'll jam pricing as well, as in customer pricing. So they'll get some free revenue growth and some free margin growth from pricing.
Totally.
You know, they won't do it right away. They'll have told the regulators that's not going to happen, yada yada. But in the end, they'll jam it through pricing.
By the way, VIX is at 21 right now, so
everything's fine.
I did a little newsletter on like a few weeks ago on Wolf's newsletter for the Sunday newsletter on Wolf Financial, and I was talking about like how, you know, VIX can really affect your position sizing, especially on futures, right? When trading those intraday. So just something to be aware of, right? When VIX keeps chugging up like that, I mean, the market might not look very different, but each candlestick, I mean, we were trading last week a few times just casually back and forth in a 250 point range, where like normally that range would look or be like 30, 50 points, right? In the market we were normally trading. So it's just something to keep aware of. You know, if you're normally trading 10 contracts, you might need to scale that down half or even more, just to kind of adjust for the volatility here, right?
I personally, I mean, sorry, go.
No, you got.
I would say I don't trade the VIX directly, but the thing that spooks me is a slow sort of grind up in the VIX. I'm just looking at the chart right now. So the last, you know, couple of weeks, it's just been slowly up, and actually this morning I feel a bit more bullish because you've got a pop which has faded so far, and every time you get a VIX spike, you get a volatility crush thereafter, which is generally speaking good for equities. So I'm not going to say we're going to get a crush today. I don't suppose we will, but it's getting closer. Whereas the last couple of weeks, you know, the slow grind up, which is, you know, people get confused what the VIX is. Jay Bain, who runs our options service, explained it to me once, which is if you think about it as just demand for S&P 500 puts, right? Think of that as a proxy. So if the VIX is going up, people are buying more S&P 500 puts. And so if there is a big spike in the VIX, that means people are panicking buying puts. good chance that reverses. And so I use it personally as and in our service as a sort of an indicator like that, which is buying volatility on the way up. That's difficult in a bull market. But when it sort of pops, then you can think, okay, get ready for a reversal on equities to the upside. That's how I tend to use it.
No, you nailed it, because like I use it as a tool for my decision making. It's not the end all
Yeah,
be
yeah,
all.
exactly.
Like, for example, like you guys saw live on the show a couple weeks ago when I did my June hedges for the SPY. I was like, VIX is at a 14. I think VIX is going to go towards 20 and above potentially in the first quarter. I want to capitalize on buying my hedges cheap right now because I know the VIX is going to explode. So right now at 22 or 21, hedging isn't cheap anymore. You're probably the R&R is not going to be there for you on the Greeks behind those contracts. So like you kind of are caught off guard a little. That's why you have to kind of be ahead of it before the volatility gets to this level.
That's right. And
it could get worse.
Yeah, but I find it helps you not short the whole, if you like, which is if you look at it now, as you say, if you're really thinking about buying hedging protection now, it might be that the market's about to fall into the drain, in which case, okay, you should have bought it now. But more likely, we're near a bottom in this correction than a top, more likely. And so it helps you, at least speaking myself, not panic and not go, oh, I'm late, hedge everything, short everything. And the way I tend to think about it is, okay, well, either, I timed the hedging and the shorting correctly, in case, well done me, or I didn't. And I missed it, but actually that means now isn't the time to be adding protection. Now is the time to be getting ready and making sure you can buy, a bounce when it comes. So I think it's a great indicator for that. I think people overcomplicate it and try and get too clever with the VIX. And the levered VIX ETFs don't work very well in my experience. They're too hard.
Too much leakage. I agree. Yeah. It's very a lot of leakage as well.
Yeah, and they don't move much. Like even if you buy like SVIX, the short. Levered short, they don't move very much when you get a volatility crash. You're better off just buying equities when the vol crash comes.
I like the SVIX, like you mentioned, like only for an intraday play for 2 hours. If like right now, if Q's puked to down 2%, I'm like, I want to buy this VIX just because I might see that little bounce intraday. That's the only way to play.
Yeah, that's a good idea.
Moving on, TikTok's turmoil opens the door for Snapchat. So we did see Snapchat start to get a little bit of movement last week. Honestly, for me, like nothing too special here. It definitely would need to get some more momentum for me to be excited about it. But is peeking its head over that $13. We're kind of trying to break out of this channel range here. But unless we get a real continued catalyst here, I could see this continue to just trade in this range as long as it needs to, right? And looks like we're kind of honestly near more like the beginning to middle of that kind of consolidation area for me. But hey, if this thing really gets going, I don't know how it's looking on pre-market here, so it might be over that $13 and looking good right now. But long story short, I would really wait for a breakout and a retest of that area if I was actually looking to trade this. But I would like to see some more momentum for me. It's not really doing enough for me. What are your thoughts, Shy?
No, you got. I'm very
really, except for.
I guess I'm here. I haven't.
Well, since that's the last time we did. Is your best friend?
No. Yeah, I mean, I hate Evan as a CEO. Like you guys cannot invest in this company long term because he has no incentive for shareholder value because he can't get fired. Once you're a CEO, a founder-led CEO especially, you don't have the ability to get fired. You could care less of benefiting the shareholders. He's just using that company as his piggy bank, and there's no activists that can come and play to force their hand because, again, he has all the leverage himself. Snapchat missed their first mover advantage on what their niche was in social media. Now it's getting replicated across the board. You have to ask yourself, what is their moat? I just don't see it. And also, they're at this stage of the maturity, like, how do they not have high teen margins right now?
Because they're not trying, right? Because as you say, I mean, you have to admire the guy, right? I mean, he's printed stellar amounts of money from a not very good company. I mean, so fantastic work. I personally think Snapchat is a really useful indicator, actually. So when they report bad numbers and the stock craters, usually, not always, but usually it takes Meta with it, it takes Pinterest with it, and it takes TTD with it. Mm-hmm. And usually, not always, those companies don't have such bad earnings because they're much better managed businesses. And so if Snap craters ad tech, it's usually a good opportunity to take at least short-term long positions in some of those names. And I think as the TikTok thing is rolling out, I personally would have thought Meta platforms. I'm long Meta for this reason, many reasons. I would have thought Meta was the primary beneficiary.
There's the bell. Market's open.
There you go.
But yeah, I agree. Right. I think Meta is another candidate to definitely do well off of TikTok. Potentially getting banned and all this craziness going on. I'm interested to see if it actually happens though. Because I feel like we've heard this before. It hasn't gone as far as it has though recently. So maybe it's actually happening now. I don't know. Either way, interesting stuff. Definitely keep an eye on some of these social media names going through all this, because there could be some opportunity there, even if it's just short-term momentum to maybe capitalize on for the day. Could be some opportunity. So keep your eyes on there. Moving on. Let's see, we got in talking about Meta. Perfect. This is perfect. Well, Meta's just been in consolidation. We kind of like broke out of that channel, that downward channel we had, broke out of that with a lot of momentum, looking great into new all-time highs. Then we kind of got slapped and right back down to where we ended up catching that big rip to the upside. And now we're just kind of consolidating back and forth. Haven't really done much since. Seeing if we can really take another high or if we need to go lower here. But again, with this happening with TikTok, I could definitely see that being one of the catalysts to potentially push Meta to these new all-time highs once again. So we'll keep an eye on that. Shay, how do you feel about that? I mean, obviously, what is it, the 19th that it's happening? So in I think a few days, we got this going on with TikTok. They're potentially getting banned. Meta's sitting right before all-time highs, consolidating in front of the breakout. I mean, how do you look at that?
So I think I'm using Meta as like the similar analogy as like what Tesla was a couple years or before this year, like last year, where everyone's focusing on Meta as this like social media company. But like if you're investing in Meta right now, it really isn't in that angle. They're going to be the leaders of AR, VR, and they're going they're using AI, their AI strategy identical what they did at social media 20 years ago, which is making it open source, free. They don't care about profits. It's just caring about the stickiness, creating this ecosystem within their ecosystem. And I think that is going to be extremely bullish on the stock for not just years, for the next like decade, because like what they're doing with Llama right now is such a smart move by Zuck that it's just it's accelerating the race to the bottom for its competitors. And they're just creating this ecosystem that's excluding Apple now, finally, that's going to benefit a lot on their margins down the line. So like, I think any kind of, even though this is a bump, but I don't view them as a social media company anymore. I view them as the leaders of AR and VR, and they're democratizing AI. And that's something to get excited about. And that has a ton of runway. Who knows what the ceiling is on that?
Yeah, I agree. I mean, Zuckerberg as well, you have to say, is a stellar CEO. He's getting a wall of trouble at the moment for allegedly switching sides. But my view on that is, well, when one side was in power,
he's playing the game, man.
Exactly.
It's all a game. You have to play it, and he's playing it perfectly. Like,
100%. Couldn't agree more. Couldn't agree more. And timed it right with the whole, getting on a board with a beer and a, stars and stripes. I mean, the guy's done fantastically well. Yeah. I mean, he's a brilliant CEO. And the other thing I think smart is, if you look at this, the Ray-Ban glasses, I mean, he's moved on from, training LLM on, go and find all the text and pictures in the world. So he's using real-time, real world human interaction data for training. That's why there's a camera in the shades, right? If you read everyone, they'll tell you that most LLMs are running out of training material because they've already read everything. They've already looked at every image that's ever been stored. And so he's gone, okay, real time. And that's going to be a big advantage. I agree. So the thing can sell off. It was hellishly volatile in 2022, as you know, but it more than came back. And I think he's a superb business with a superb CEO, and they keep reinventing themselves. Yeah. Don't forget, the IPO was a disaster. It sold off hard on the IPO in 2012. Again, I'm old. And they missed mobile completely. When they launched, they were already behind in mobile, and they caught up really quickly. Everyone said Instagram was a disaster, overpaid. Same thing about WhatsApp. Zuckerberg's a superb CEO. So I am long Meta, and I think it has a good long runway from here. I agree.
Yeah, definitely.
So Jordan, let me ask you this question.
What's up?
What were your thoughts about the Meta IPO when you were eating your 7th grade lunch?
Dude, it's so funny to think about that. Like, I didn't even know stock market was a thing. Like, if you asked me what the stock market was, bro, like, I don't, what? I don't know. I literally, I didn't even
It's a
find
virtual
out about the
playground.
stock market, dude, until I got laid off from my first job at like 18, almost 17, 18. I mean, that's really when I was like figuring all this out. That's crazy, man. Crazy to think about.
Ooh, crypto's below
I
90K.
wish my
Bitcoin's
parents bought
below
me some
90.
Apple shares. That's for sure. That would have been nice. Fresh lows for AMD is the last chart we got. I mean, we've highlighted what AMD is doing over and over on the show, and honestly, it's just never gotten that real traction needed to get back to the upside. You saw, I mean, over what was that? Maybe the past few weeks. I don't exactly know what time frame this is, but over the past few weeks, right? You had a try to the upside, but it just overall failed. You couldn't get continuation there. We saw a nice back test actually of the range that we broke out of, but they just obviously kept selling it. Got a change in structure and took the lows, and now we're just continued down, right? I personally sold my long-term shares that I had, took gains on them, not nearly as much as I had, but still a decent gain. And again, like we talked about, I had to make that decision at some point, and now we're just holding on with Nvidia. So at the end of the day, I can't really like AMD on the chart wise until you actually get a change in the structure here, some bullish action off these lows, because you're just not seeing it at the moment. So I don't know if you guys have thoughts on AMD here. It's looking pretty nasty.
I think they've always been that they're not a leader in anything. It's maybe the best corporate turnaround in corporate turnaround history, from the lows. But they've never led in CPU. They've never led in GPU. They haven't created and invented a new category to dominate, which is probably what you do if you were them.
Mm-hmm.
They've got probably probably resurgent Intel at some point to worry about. Nvidia isn't giving up that position anytime soon, and they should worry about ARM as well, right? So if you think about what has to happen in AI compute, it has to use less power. You can't go on building nuclear power stations to run a new data center. It's preposterous. And so at some point, chip design and overall system design has to use less power. And so if you were ARM, you've got 20 plus years of low power DNA, and you would have designs on that, as in you would be going, right, well, we're already where the puck is going to, let's design into that. So if I was AMD, I don't know what my strategy is. I've got, two categories that are dominant that I don't lead, and I don't know what the next category is. And if I can think of it, ARM might already be there with, design partners. So I think it's a tough play, AMD. It can have a technical bounce, of course it can, but would you want to own it for the next 20, 30 years? I can't think why you would, personally.
Yeah.
So
I agree.
I think if I had to put my corporate strategy hat on, there's one thing that AMD needs to fix, and it's completely underwhelming, and that's what's really creating the stickiness for Nvidia. Their software offering for their ecosystem is so underwhelming. It is not going to change the game for developers. The open source nature of it was nice in the beginning, but this is not good enough. And when they put their treasure chest towards ZT system or whatever that server company they acquired, I was like, that's a misallocation of what they should have done. That is not I know they're trying to create that ecosystem narrative. Servers is not the way to accelerate that. You need to figure out the software issue, because right now, NVIDIA's CUDA platform, for example, it's applicable across so many different thematics, and it's creating this sticky nature in their revenue now going forward, where it's going to be much more recurring, less cyclical. AMD needs to fix that software element of their ecosystem. Until that happens, I really don't think the stock turns around, because, again, it's not good in this new day and age, 2025. It's not good enough to just be a hardware company anymore. You need that ecosystem around it. Not having that software piece is such an F up on their end that they need to fix. That's the top priority. Every week in the weekly meetings that they have in the boardroom, like with Lisa and whoever their executives are, that's what has to be at top of mind of how to solve that. Maybe M&A is the route of that, but again, are they going to go down that path when they just spent billions of dollars on a server company? So it's a huge headache for this company, and they'll always look undervalued, and you have to dig more into the numbers. It's not just about the numbers, it's about their pathway towards their mode and advantage, and I just don't see it right now until they solve that software element.
Yeah,
Yes,
Alex, I wanted to throw it to you a little bit so you can kind of talk about what you got going here with the charts you posted on StockTwits. It's super interesting. I wanna hear about this and what you're doing all everything over there.
yeah. Okay. Well, look, it's obviously a long-term SPY chart.
Hmm.
It's pretty much the same chart I've used now work for a couple of years, and so we use the Elliott wave and Fibonacci system. It's not perfect, but it works for us pretty well most of the time. And so this is the chart we've been using, as I say, for a couple of years. It starts like time equals 0, that vertical dotted line you see on the left-hand side. That's right at the COVID lows. That's where most things reset, right? So monetary policy reset, fiscal policy reset, wall of federal liquidity came into the system. You had a massive reversal in option flows because everyone was so bearish coming into Q1 2020 options expiry, and that catalyzed that move up. So we get the 2021 bull market high up around 480 on the SPY, 50% retrace down into the October lows. Everyone thinks 2022 was terrible. It wasn't. The first half was rough, right? The second half was consolidation. And if you look from about April and May 22, you just got sideways consolidation in the SPY. Before that, acceleration upwards. So the flag we'd said was this chicken bull target. We'd said, look, the 100% extension of that wave 3, which is 609, that's going to likely be some at least short-term resistance. It might be the end of the bull market, but probably not. That wouldn't be much of a bull. As it happens, that worked out pretty right. So 609 was hit and it's reversed since then, and it hasn't retaken that yet. So for continuation of the bull, on this time frame, our view is it's got to get up. SPY has to get up and over 609 and turn it into support. I think it will. That's my best guess, and I think it can move on up to at least 670 and maybe beyond. Technically speaking, on pure pattern recognition, this chart puts a high at 770 before the end of a bull market. If you ask my opinion, my gut, that seems a bit much to me. But usually my charts are better than my opinion, so I try and force myself to trade on charts, not my gut. So 609 key level in the SPY, lot longer term. If you've got the QQQ chart there, it's basically the exact same story from the COVID lows, bull market high in 21, and a deeper retrace, as we'll see in a moment. So if you can get QQQ up. Should be the next one down. That's it. Yeah. Yeah, that's it. So same story, big move up in the QQQ, 61.8 retrace for the bear market. So the SPY, less volatile than the NASDAQ, so it drops to the 50% retrace. NASDAQ, more volatile, drops to 61.8. And then 100% extension on the NASDAQ, the equivalent of 609 for the SPY is 522 on the QQQ. And again, it hit that, did get over it, actually held it for a couple of weeks and then fell back again. This is a weekly chart we're looking at here. So 522, I think the QQQ has to reclaim, turn that into support from above, and then we can move up again. Again, best guess, it will do that. And if it does so, next target on this time frame, slightly longer term, 585. Maybe, technically speaking, pure pattern recognition, you'd say the QQQ could get to 680-ish. My opinion, again, gut, that seems a bit much, but I've learned to trade charts, not my gut. So that's the longer term take. Shorter term, my opinion is we're probably nearing a bottom now for this short term correction. We all know that moves tend to go further than you think. So sell-offs can go further than you think, run-ups can go further than you think. But my guess is we're reaching a correction now. I've successfully got some short gains, not enough. I'm always a bit nervous with shorts in a bull market. So generally my experience is I tend to chicken out of short positions too soon. But I can live with that. I figure, well, if you haven't shorted enough, then you back out, take your short profits, and then just buy the dip when you feel safe in a bull market. And we're in a bull market right now. That hasn't changed.
I agree. Yeah, I like this way you're looking at things. This is super interesting. And it's very clear, right? It's like, okay, clearly we need to make this, we need to, flip this level. pick its support. If I'm not seeing that happen, if we're struggling to do that, then I need to watch out and be a little more cautious. If I'm seeing what I want, then it's game on, and we continue going how we are, right? So.
If you go, we haven't got the charts here, but if you went back and you looked, actually we have. If you would just call up again, get either the SPY or the QQQ up. Either of those would be fine. If you look back to the end of the 21 bull market, okay, it didn't just go to zero straight away, okay? And so as long as you hadn't, levered long every dollar you had right at the all-time highs, it was fine, right? Because it tried to break over that sort of 480 level on the SPY, couldn't. Sold down, came back up again. And then, if you look through, so this is a monthly chart. If you look at January, February, March, I think, of 22, look, it kept hitting the same ceiling. And the fact that it couldn't push through that told you that it was going to sell off, okay? And then when it bottomed out in 22, it didn't just suddenly reverse vertically to the upside. What it did is it tested the low. It tried to find more sellers around that 350 level, couldn't find them, moved up again. So I know there's this, notion that nobody can call tops or bottoms, but you can. Nobody can do it perfectly, but you can if you learn any chart mechanism that works for you. It doesn't have to be this one. Any technical analysis system can tell you when these things happen. If you can think calmly with some distance, you haven't just poured all your money into a long or a short position at a pivot point, the market will tell you what it's going to do. And so, this 609 level on the SPY, if it trades back up to there and it rejects it again, well, maybe that was it. Maybe we're done, and maybe we're in another bear phase. But until it's retested it, I think this is a dip. That's my best guess.
Yeah, good stuff there. Something to watch out for, especially going into the new year.
Yeah.
I mean, like we talked about earlier, just things expecting more volatility, right? It's just more uncertainty. It's not like, my God, let's just show up and buy every dip and not care. You know what I mean? That's what this year has really been.
That's exactly right.
Since we got that momentum off the October lows, So definitely got to be a little more cautious this year. Little more just kind of, okay, if this happens, I really got to do this, have those rules in place. But no, I love the way you're looking at the market, and I have used waves in the past. It's kind of fun, honestly. I never really got good at it, but
I don't think there's no special magic about it. I think what we all have to do is find. I mean, I personally, a trained fundamentalist with a background in venture capital and leverage buyout, so I come from fundamentals. But I've found with public stocks, technicals are a much, much better way to trade. And I think all you have to do is find a system that feels natural to you, where you don't have to, constantly sort of think about, is this right? You just get used to the pattern recognition system you're using. I don't really think it matters what system you use. What you just have to practice, and
Absolutely.
Practice with small money before you get good at it, and then bigger money. And when you find a system that works for you, then you can get some confidence in it. There's many systems. It just people have to learn a thing that they're used to. Yep. And when it works for them, don't chase around to try and find the new thing. Just stick to what you know.
I'm with you there. Like strategy, your strategy doesn't matter. If you have a good strategy, I mean, obviously you need to have a strategy that works. I'm not saying that, but you could have a beautiful strategy if you can't, psychologically execute with that strategy. Just reading the market and then actually executing on it are two completely different things, right? So being able to do that is just it's very important. So no, I appreciate you coming on, Alex. Let's see, what time is it? 6:48. Do we want to go on over any charts, guys? Shay, you got anything that you want to go over real quick, or are you all clear?
I'm taking a look right now.
No worries.
So
just giving you the
I will say Nvidia is at a very important level on their charts. The 21-week EMA, it's at 132. It's kind of broke that. So that's something I'm monitoring for sure. It's a very close one. Again, Nvidia is the market. I know it's like such a stupid comment to make, but it really is. Their hand is in so many different parts of like all the different markets that if Nvidia is struggling, it's going to be a snowball effect that's going to affect semis. Semis are a heavy component of the indices, and then it's also going to somehow get to big tech, and like then from big tech, if all these names are struggling, is the AI theme really not as near-term monetization? It's going to hit mid-cap. Like Nvidia is the heartbeat of this bull market rally. So seeing them lead the pullback pre-market is like, oof, that might be an ugly sign. And seeing them also violate the 21 EMA on top of the SPY, doing the same thing in Qs, and seeing not much of a bounce pre-market is somewhat alarming. Like, I'm not really using any capital right now to add this dip. Like, I'm just being very slow, meticulous. Like, I'm being a turtle-like person on it because I just think that it doesn't scream urgency yet to me. However, there is a knight in shining armor that might come rescue it for everyone. It's earnings. Earnings is just beginning now. We have TSM's earnings report later this week. It's TSM is like, it's a loaded one because you get monthly information from them. So like, it's going. Spoiler alert. It's going to be a good earnings, but I don't know about their guide. So that's going to be somewhat of a commentary. TSM essentially is the invisible web behind the digital economy. Like, you absolutely need it. It's sticky. All the big time suppliers use them, and all big tech uses. Like, it is the invisible web of the digital economy. So that's going to be a major spotlight this week, and also like next week's beginning like earnings season, like really hard of it. Like, I know banks are starting this week, and we have TSM, but I think earnings could be the catalyst that saves the day, and then you see the party's continuing, and people are going to be like, if big tech's showing dominance again, like, we're going to feel comfortable investing in the market. So that's kind of the strategy that I'm using. I'm just like, don't have that urgency. So far in 2025, like, we're not seeing any kind of characteristics that we've seen in 23 and 24. That makes me a little cautious. I think like what Alex is saying, I agree with him that we're closer to the bottom of this correction than the top. So that gives me somewhat of like comfortability, but I'm probably like a lot of other investors. Like, I want to protect my gains for the past 2 years. Like, I don't want to over invest early on this correction that I just like, maybe if I play patience, I can like get much better deals out there, just slowly DCA my plan. But right now I just don't see any kind of bounce back nature, and we're below some key technical levels. So until I do, I'm being cautious.
Yeah, I think it's fair. It's hard to argue. I'll give you here's two bullish things. Like, bring up the DIA chart if you can, just because the Dow's up right now. And the only reason that's interesting and important is because the Dow led the sell-off, right? It started dumping before the other indices, and sometimes, not always, the Dow can lead the way. So if you look back to the October 22 bounce out of the bear market, the Dow rocketed up first. It flattened out then, but it was the first index to come up and off the bear market lows. Dow, you zoom in a bit, go to maybe a daily on the Dow. The Dow. Okay, let me just I'll share one right now. But basically, the Dow started this correction, right? It was the first one to roll over, and it sold off a lot. Sometimes the Dow can lead the way on the way back up, and so the Dow's up, not much, 0.2, 0.3% this morning. But I would just watch that. If the Dow does start to catch a bid, the others might follow. The other thing is if you look at the 10-year yield, I mean, it's up compared to Friday's close, but it's falling this morning. So that's not reason to celebrate in and of itself. It's not a definite market reversal, but it's a suggestion that we might have one. And the other one is I just posted an Nvidia chart on our account. If you take a look at that, it's not terrible in my opinion. I'm long Nvidia, by the way, it's just for disclosure. It's not terrible. If you just look at that wave chart, Nvidia does trade to technicals really nicely because there's such degree of institutional ownership. So if you go back to the July timeframe, you can see a really nice technical sell-off, an ABC correction into the August 5th lows, and then a perfect, one up, two down, holds just over the 78.6 retrace in September, and then it started this wave 3 up at those September lows. So far, there's no reason to suggest that wave 3 up with about 165-ish target, it isn't broken. It might break in half an hour or a day or a week, but it isn't broken right now. And if you look, it's only up since open today. So it's not ripping up, but it's only up since the open. It gapped down, but it's holding over the December low of 127. It's holding over just that wave one high in August of 131. It's just about past that. So I don't think this looks like doomsday for Nvidia. I agree, be careful. I wouldn't be pouring a ton of money into this personally, but I'm long stock. I bought a couple of units of NVDL, the levered single stock ETF at the end of last week, and we'll see. And not a big allocation, but I think there's a chance that can keep going up. So yeah, I don't think it's all grim out there. I think it's easy to get caught up in that narrative. I think
Well,
there's
it's definitely not all grim, because I just made some money on the long side. This market's getting a
There you
beautiful
go.
bounce, so
Congratulations.
it's definitely not too grim.
And you can do two things at once. That's impressive. That's more than I can do.
It's not easy. I just have practice because I do it all day. But
Well done.
no, but beautiful show, gentlemen. I appreciate you coming in, Alex, and sharing your thoughts.
Delighted. Thank you.
You're the
Flattered
man.
to be invited. Thank you.
Yeah, of course. Shy, appreciate you. If you have any other thoughts for the audience, feel free. But I think we're good to wrap up.
Yeah, we're good to wrap up. It's going to be a fun week. Just have dry powder ready for any kind of accelerated dips, because I think it's a buying opportunity, but things get really ugly before it's a bottom. That's a key difference. So be prepared.
I do want to say, Shy, you've kind of called this market pretty well. I don't know if anybody wants to go back to the Daily Rip episodes and fact check, but you guys should go listen to some of the conversations me and Shy had before the new year, and then looking at the new year now. It's very nice to see. Very nice to see. So
Congratulations.
everybody enjoy the trading day. What's up?
Yeah, and I was like, that's the beauty of having a plan. Like once it comes,
of course.
Like once you plan ahead of what's going to occur. Like right now, the market going down 6%. Like, do you see me blushing? Do you see me freaking out? No. Like, I anticipated that. I had my plan. I have my conviction list I'm going to add if things get really bad, and I'm sleeping really great at night. So like that's the kind of mentality you need to have going forward, especially after we've run up significantly the past 2 years. Like it's going to be a choppy year. You need to be able to survive it and thrive.
I'm with you. All right, well, everybody enjoy the trading day. Trade safe. Follow your rules. We'll see everybody back bright and early tomorrow morning. So enjoy the day. We'll see you then. Peace out, guys. Yes, sir. Great show.
Great show.
Thanks for the invite. Much appreciated. Enjoy that.
Absolutely.
Anytime. Yeah.
Solid. Okay.
Great. How do I post the recording of this? Is it, where's the... Okay, I get that. Okay, all right, I'll do that. Great. Thanks, everyone. Much appreciated. Thank you.
Yeah, thanks, Alex.
All right.
Thanks.
No. Oh, okay. All right. Yeah, of course, yeah. Okay, to switch the camera off? Yeah. Okay. I'll leave the window open. Okay. All right.
Later.